Welcome, Ryan Dumas, to Wealth Matters podcast. How are you, sir?
I'm doing great, Alpesh. How are you doing?
Good. Thank you for asking. Hey, Ryan, I did a brief intro about you already, but can you share what's your primary job or business?
I work for GRP Capital. I do commercial financing, primarily apartments, hotels, but other multifamily commercial assets out there.
So, when you mentioned commercial, and I have also heard commercial financing so many times, and that was the reason I wanted to have this podcast so that my listeners can understand what's the difference between residential financing and commercial financing. So, what kind of properties would qualify for commercial financing?
Commercial financing is 5 units or more.
Okay.
Uh, a fiveplex apartment complex, assisted living, residential, anything 5 units or more. I do a lot of hotels, gas
Okay.
stations, so anything in that realm.
Got
I
it.
have never done residential financing, so I can't really compare.
So, but do you know about residential financing and how is commercial financing different from conventional residential financing?
Correct. From when I bought my house, it was pretty cookie cutter about
Right.
what they look at, money you make versus how much the real estate can make with net operating income versus how much money you make and everything else for the residential income. So it's a little different. It's a little bit more driven on how much you can make at that asset.
So, which one is easier to get, just in your perspective? Is it residential financing or commercial?
It really depends. I like commercial better, but easier. It can be residential, but if you're looking for your second or third residential, I just don't know on that aspect. I like commercial. It is more. It does take longer to close,
Right.
and there's questions in there. So I know residential is easier, but I have friends that do residential, and they're trying to close 10 deals a month just to get that aspect of what we're making in the commercial side and how we're doing. But it's a completely different ballgame. I like the commercial. I think it's more work, and I like more work sometimes.
So, who are the typical lenders for like this commercial financing? Who do you go to? Like the big banks, or is it Fannie Freddie, or is this community banks?
So we'll use Fannie and Freddie on some cases, but they're very they're very
Rigid?
they're yeah. You have to have 90% occupancy for 90 days, and if you have a smaller place and somebody moves out, now you have 88% occupancy. Then so we have some larger life insurance and some larger CMBS, commercial mortgage-backed service lenders, which are non-recourse. And then we have some local bank slash commercial lenders that are nationwide. And we have like 3 to 4 banks of each of those divisions. And we have a really good relationship with each one of those lenders that we have.
Got it. Hey, you just mentioned non-recourse. Can you define it for my listeners?
Non-recourse is whatever your LLC is the only thing that's mainly guaranteeing it. So on a recourse, they can come after your house,
Personal
your car.
assets.
Yeah, you personally guarantee it. On a non-recourse, it's a big bad boy carve out, but they can only come after that asset that attains that LLC.
So it's kind of a good thing.
It's a real good thing when you start getting into bigger assets and a bigger number of assets that you have. You got to cover yourself.
Right. So, what are the advantages of commercial financing? You kind of just mentioned non-recourse, which I would consider it as one of the big advantages of commercial. But can you specify other, or can you think of other advantages?
Well, with the hotels we have with advantages that I see is we can do 15 and 20% down for SBA for hotels, and for the um, mainly the self-storage, we can do around 10 to 15% down.
Wow.
So, it allows you to commit with less equity, which would be less partners or less investors, whatever kind of loan you're getting. Just depends on each different scenario. So we educate each guarantor that we talk to so that it fits right, because sometimes they want a SBA loan, but they're not, but the asset doesn't meet that requirement. Sometimes they want conventional, and their conventional lenders aren't giving them any
Right.
going ahead and getting approvals. But on the multifamily side, basically, it's pretty much private lender, conventional, non-recourse, and then I guess you can call it interest only, hard money construction lenders is the basics.
So you just mentioned SBA, and I just want to make sure SBA is the small business loan, right?
Correct.
And what kind of properties can qualify for SBA? I know multifamily won't, but like residential assisted living would. What kind of other properties would qualify for SBA?
Do about 16 hotels a year on SBA. We
Oh,
do a
okay.
couple of things, a gas station,
Oh, I
medical
see.
office. Those are the bigger ones, and then it goes down to restaurants. But a lot of the restaurants are not lasting too long with the economy right now.
Right. So does SBA require any kind of collateral?
Yeah, yes, they like collateral. They usually take that business,
Uh-huh.
the mint that it has. But if it's a land lease, they will want something else for collateral on the SBA loans, because you're only putting in 20% down most of the time.
Got
It's
it.
either that or money down.
So what are the gotchas for investor while trying to get commercial financing? What are the things someone should keep in mind?
For the investors, I mean, the best thing for it, I mean, to get, for commercial financing is just making sure they get the right asset. When you get a commercial lender, they're looking as an investor, and an investor kind of looks at it as they're the bank, or they should be sometimes, because they look at risk. So, but commercial financing helps you get 2, 3, or more assets, and and get equity in those assets. Another thing as well is you have the land and building, which is worth a good bit of money 99% of the time,
Right.
instead of something that has just cash flow.
So, but what are some of the things someone should keep in mind? Let's say, is it points? Is it prepayment penalty? What are some of the things someone should check while they're shopping for commercial financing?
I mean, it really depends on what kind of program you're looking for. I mean, when you have a non-recourse, there's usually a set prepayment they have, in your tranche. If you're talking about an SBA, it's government. They're going to have the same 5% year one, 3% year two, 1% year one. On your conventional loans, you want to look at rate, term. Is it a 15-year amortization, a 20-year, a 25? Because the smaller it is, the less cash flow you have.
Right.
You also look at origination or broker or lender fee. Those are a couple of things on there. Also ask your lender, what are you going to do if the appraisal doesn't come in?
Uh,
Some lenders are, you can bring in extra $100,000 or whatever that amount is that came in. Some lenders will have you pull up a life insurance policy. I mean, there's different options depending on what kind of loan you're getting versus, conventional non-recourse SBA. On the SBA, we have some deals that come in 150,000 short, and we'll just have them send the lender as a beneficiary on a life insurance policy instead of them coming in with an extra 150,000, and that saves them, a good bit of money, or having to go out and get our partner.
got it. Can you drill down on some of the things lender looks at before and during the funding process? What do they ask for as soon as let's say, reach out, and what would kind of documents or requirements they have during the funding process?
I mean, there's a few different things. The main thing they're looking at is that asset,
Uh-huh.
the location, market around you. How is it competing? How is, that asset doing? Because you can have an asset that is, absentee owner and management company is not there or not doing a good job, but the other apartments or whatever it may be are doing really well. And then number
Right.
3 on there, experience of the operator or operators. So if it's your first time in the business, hopefully there's a partner that's is seasoned. They'll look at that too.
So what
So
do
if
you
they have,
mean by that? Let's say, because I'm just starting out, means I have owned small multifamily for a while, and I want to acquire big apartment building, let's say 200 units, and I know I can have investors. But what do you mean by I would need to have a seasoned partner with me? Can you please elaborate?
so I mean, when you're buying a 200, the main thing they're going to ask for is who is your asset management, your property management going to be. And if you'd say, hey, I had some five plexes, some eight plexes in my portfolio, I'm using Southeast Hospitality Management. And then they look them up, and if they're decent company, everything good, they ask usually how much rate they're going to charge. Is it 3%, 5%? What are they charging you? You're fine.
I
But when
see.
you go to the 60 or 80 unit and you don't know that they're going to charge 8 and 10%, and you think they're charging less, they want an educated person just to make sure. If you look out and you know what they're going to charge, but I've had some apartment complex that closed around the 80 unit, and they thought me around 3% fee, and all of a sudden they come back and it's 8 to 10%. The cash flow is about 7%, 8% difference. So that's one of the things you got to look out for is doing all your due diligence before you close, not quite just everything after.
I see. And I have heard as well that sometimes you need someone to sign on the loan, or there is sometimes net worth requirements. So, especially, I'm talking about from multifamily acquisition perspective. So, can you describe that?
It works out on different deals. They're all different on that aspect. Sometimes they're looking at that 10%, but it matters. We have creative solutions on our conventional and non-recourse deals where there's 2 or 3 sponsors on there that aren't very strong. But when you're coming in there to put a $20 million or a $40 million deal together, and you have $30,000 in a bank account, you're you're definitely gonna need a key player, a sponsor,
Right.
somebody. And there could be 3 partners on that are pretty decent that have had some 60, 80, 100 units that they still have, or that they sold, and it shows in your PFS that you have some cash in there, and you put the story together that you've bought an apartment complex for X dollars and you sold it for 2 million, 3 million more. They know you're experienced and everything else. Now you're trying to go to a 150, 200 unit. They understand that.
Got it. No, this is very helpful. Ryan, let's take a quick break and we'll discuss about some of the deals you have closed recently after the break. Welcome back to Wealth Matters Podcast. I'm chatting with Ryan Dumas, and we are discussing about commercial financing. So, Ryan, right before we went on break, we discussed, what's commercial financing and how can one get it. But can you talk about 1 or 2 deals where the buyer was able to pretty much get most of the money out of the deal, right? Because and when they refinanced it out, they were able to even get pay their partners or investors. Have you seen any of those kind of deals?
Yeah, I mean, we've had a couple of deals. I can go one specifically that it was around the $3 million range, had a $1 million in there. They increased the rents. I think it was around $225 a unit. And after about 12 months, I believe it was, of stabilization, the value of the apartment complex went to about almost $10 million and pulled out a 75% LTV. So then the new loan was $7 million. They pulled out about, I think it was about $2 million or more, paid all the partners back all off what they came in with. They kept their equity in the deal. Very good deal. And they're pretty much the nicest apartment complex, in that Alabama market right now.
That's awesome.
It was nice that, new gates, new upgraded rooms, interior, exterior. But, now it was one of the worst looking buildings in there. Now it's the nicest one in that area. And rents are going to be going up in another, 6 months or a year again. And everybody's happy on that deal.
That's amazing. And have you had any other deal where you offered a creative solution like creative financing or something else?
Well, I can just go in there and I mean the creative financing. I mean, I had people in the SBA deals that just say they would go ahead and buy a hotel for say $5 million. Their local bank would give them say 4.75% rate. I might have on one deal a little bit higher of a rate or the same rate, but we can go ahead and get their renovations done with the loan.
Oh,
And
nice.
and the local bank would tell them, no, we can't do your renovations for them. This is our max budget. And we would go in there and we would creative, ask them what their renovations are, put on an Excel spreadsheet, see how much it's going to cost. And sometimes it helps them out because they might not have had it down paper the way they thought it was.
Right.
And they thought it might have been 500,000. We looked at it, put our contingency in there with prices going up, and put that in there and plan. And now they can go ahead and get those renovations done instead of using them into cash flow, which is usually takes the longest to get that cash flow. You're not supposed to use your renovation money from the cash flow.
So how would it work? When you are closing, that cost is included, and when the bank lends you money, is that money stays with the title company or in escrow, or how would that work?
It depends on the bank, but usually they'll write it out and pay those companies that you get the renovations to. If it's a general contract on there, they'll do draws with a general contractor and pay them.
I
If it's
see.
a deal from 2 or 8 suppliers, they can go ahead and pay them directly through invoice, a day later, or they can give you working capital money. If it's a couple $100,000 or less, they can have that set aside and give it to you at closing. If it's usually 20%, or a smaller deal, if it's 200,000 or less, they can give you that working capital at closing, so you can buy the paint and the smaller items, so you're not writing an invoice out for $500 every time you get something
Right.
small.
Right. No, that's interesting. Any other interesting deal comes to your mind, or a deal which was really hard to get financing for, but you are able to make it work?
I get all kinds of deals that are hard. The hard ones are what I like to do sometimes, but I had one deal I can say, and it was an asset that the client had 7 hard money loans, 3 equipment finance loans, and I would say the payment went down from about $40,000 a month to $20,000 a month.
Wow, that's
And
cut in half.
yeah, so right now we're putting him into it, and this is like a couple of years ago, and right now we're putting him into a non-recourse now at around a 3.68%, I believe it is.
That's crazy.
It was more of a 2-step process, but we went that gentleman into a SBA loan at like an 85% loan to value, and now he's got a non-recourse we're getting for him, and it's a great loan that he's going to have.
That's amazing. So let's say my last question. Let's say someone reaches out to you, and they are trying to buy mobile home park or a multifamily apartment building. Uh, what do you do? What do you ask them, and what's the process, right? Where do you go from there? Do you ask them for certain documentation, and then do you start shopping for rates or lenders, or how does the process work?
So as you said, a mobile home park, I mean, one thing I ask is I get calls, and I have on Facebook on a page, a group, and I'm in a lot of other pages and groups in Facebook as well. So I mean, I've had the presence for about 3 or 4 years now on there, pretty high. So I get people that call me, email me, text me all the time. So first I ask, what the asset is. So for instance, if it's a mobile home park, mobile home parks are easiest to get financing for local banks.
Oh, really? Okay.
Really is. I mean, I have yet to talk to somebody with those that have done different kind of loan. I mean, I've seen SBA do them, but they're pretty picky about them and everything else.
Right.
It's a great asset, but I first find out what asset you have, what the revenues are, how much you owe if it's a refinance, or if you're buying it, how much you're buying it for, and then find out with each asset what inside outside numbers are. If it's an apartment complex, finding out what the location is and digging a little deeper. Sometimes I can tell the person right away, hey, it's this kind of a loan you need to go to, or you need to call your local bank, because I see myself as more of a financial advisor sometimes. advising them where to go, what to do. That's the best way to describe it. I have people that want, one loan, but I ask them what their projects are, how many properties they have total, what the structure is on all of them. And sometimes I end up, refinancing their whole portfolio, not maybe together, but separately, and get them the best loans for all their products that makes more sense to them and their future, of how they want to do things. Because somebody buying something that wants to flip it or sell it in 2 years versus somebody wants to hold something for 10 years would be a completely different loan. I'm not going to get somebody a non-recourse loan that wants to sell it in 2 years because it might be a little bit difficult on their end to have somebody else assume it.
Right. So either, it has to be assumable or there will be prepayment penalty, right?
Correct. And if they assume it, they got to be qualified for it. But if they're, getting an extra $6 million for the property, the person has to come in with that extra $6 million because they're assuming it. And then whatever
right.
So if there's 30% down plus the price is increased $6 million, they're generally at like a 40 to 45% injection now. And if it is a 1031 and they're trying to use all the money, that's fine. But it's a little bit hard. Most people get a 10-year non-recourse, and if they don't sell it at that timing, they'll go ahead and get a conventional or a hard money or something like that. But they'll find the companies out there that'll definitely close on that certain date for them, or at least within the last couple of months, where their defeasement's very, very little.
Oh, that's interesting, and thank you. So anything else we forgot to discuss or you want to talk about?
No, that's about it. I mean, I don't know if I start off, but I mean, I do live in Clearwater, Florida, but I'm at a lot of events for multifamily and in hotel events as well. I mean, if anybody wants to reach out to me, I can give them my information and everything to reach out to me.
No, absolutely. That's what I was going to ask you. How can my listeners, reach out to you?
I mean, via phone, text. I am 727-729-2647. My email is rdumas@grpcapital.com, and that is capital spelled out capital.com. I can leave the information on the top page of this when we discuss this when we put the podcast on.
Yes.
So you can reach out to
I'm
me.
going to do that. Yep.
I appreciate it, Alpesh. And like I said, if there's any questions about a specific asset, let me know. I am, very busy right now. We're closing out a lot of loans for the end of the year.
That's great. But I'll be in touch for myself as well. And thank you so much, Ryan. Take care.
I appreciate it. Alpesh, thank you, sir.